Here are some of the top stories we're watching this week. All eyes will be on the US with tariffs from China and US sanctions against Russia coming into effect. We'll find out how the Eurozone's powerhouse is faring when Germany releases its second quarter GDP figures. And the UK's second largest house builder will report its half-year results, giving us a look into the state of the house building sector. We'll start in the US, where two upcoming events will illustrate the scope of President Donald Trump's impact on US foreign policy. The first is a new round of tariffs from China on US imports, and the second is a new set of US sanctions against Russia, which are due to come into effect by August 22nd. The Chinese tariffs will target American imports including coal, oil, chemicals, and medical equipment. They're the latest escalation in the China-US trade war that began earlier this year. And President Trump's tariff gambit represents one of several instances where he has distanced himself from policy positions that once appeared orthodox to the Republican Party. Another example is his largely positive rhetoric about Russia and Vladimir Putin, even as Mr. Trump's administration imposes increasingly stringent sanctions against the Putin regime. Here's Courtney Weaver in Washington, D.C. with more.
With this new round of sanctions against Russia and the tariffs that China is about to impose on the U.S., you're really going to see the initial effects of Trump's foreign policy and how this is going to affect A, the U.S. economy, and B, the Republican Party's chances in the midterm elections. The sanctions against Russia were cheered by conservatives and members of the Republican Party who think that Trump has not been tough enough on Russia yet, so that could provide a boost for the president and his party. On the other hand, with the tariffs, even though the trade war has been going on for a number of months now, you're really going to start seeing the big impact of this come November, right before the midterm elections take place. So it'll be interesting to see how that impacts the Republican Party's chances as well.
Now, on Friday, we'll get a detailed breakdown of German economic growth between the first and second quarter of this year. After a 0.4% rise in the previous 3 months, the hope is that the expansion of the Eurozone's most important economy remains on track. With almost a third of all Eurozone economic output coming from Germany, weaker growth there would raise concerns of a broader regional slowdown. But German industry is heavily reliant on export sales, and confidence among businesses has dipped amid the trade war between the US and China. Here's Claire Jones on the outlook for the German economy.
The German economy is by far the Eurozone's largest economy, and over the past few years it's also been one of the strongest. Now, the trade tensions between the US and China have derailed confidence in the economy somewhat because Germany's model is so reliant on trade. The question now is whether stronger domestic demand in Germany can keep growth on track. Now, unemployment's very low here. We're also starting to see better wage growth. So the sense is that higher consumer spending, a little bit higher government spending could save the day at a time when export growth is perhaps not going to be as strong as it has been in recent years.
And finally, in the UK, house builder Persimmon will report its half-year results on Tuesday. The company has spent much of this year battling with angry shareholders over its lucrative executive bonus scheme. Its most vocal critic, the Scottish fund manager Aberdeen Standard Investments, called Chief Executive Jeff Fairbairn's £110 million pay packet preposterous. And politicians have also criticised the builder for paying top executives large sums while benefiting from the government's Help to Buy equity loan scheme. UK house builders have broadly continued to report rising profits, with favourable mortgage rates and the government's Help to Buy scheme enabling people to borrow enough to purchase their homes. However, analysts are warning that Brexit-induced labour shortages, rising costs, and sluggish house price growth will all make it difficult for profit margins to keep increasing. Here's Amy Williams with more details on Persimmon.
Recently at its annual general meeting, Persimmon, the UK's second largest house builder, faced uproar from investors who were angry about the high level of pay Chief Executive Jeff Fairbairn was receiving. He then offered to give some of the money back, and the company will be hoping that's now behind them. On Tuesday, it'll be telling investors how much profit it made, having already told us that it made 5% more revenues in the half year so far. More broadly, investors will be looking at the increase in the house builder's costs. Over the year so far, most of its competitors have been estimating an increase in costs, that's both labour and materials, of 3 to 4%, and people will be keeping an eye on that on Tuesday.
And that's what the week ahead looks like from the Financial Times in London.